Hello guys, in this video we are going to look sums. So in the previous video you can find the theoretical part. In the continuation we are going to look our first sum. The first sum reads X Leasing Limited purchases a special equipment for rupees 10 lakh. The special equipment is necessary for port to handle cargo. X leases the equipment to Bombay Port at lease rental rupees 4 lakh 2100 per annum for 3 years. After the lease period, the port will have option to retain the equipment upon payment of additional rupees 100. So this is the sum. So this is a very simple sum. Here what we are going to see is how basic this lease is. So let us start with the simple sums. As we go, we will introduce to the more difficult concepts. Let us follow the conventional method which has been followed in our previous videos. Given, it will be easy for us to carry forward the sum. So what is the cost of the equipment? The cost of the equipment is nothing but rupees 10 lakh. So what is the lease rent? The lease rent is nothing but rupees 4 lakh 2100. So what is the period of the lease? It is for 3 years. Another important point to be noted here is at the end of this lease period, by paying rupees 100, the lessee can keep the equipment with him. So let us perform the sum now. So first we have to know what is the total payment, that is total lease rent. How we will calculate it is the lease rent per annum into the total number of lease period, which comes to be rupees 12 lakh 6,300. But if you see, what is the cost of the equipment? What is the total cost of the equipment? The total cost of the equipment is rupees 10 lakh. There is an extra addition of rupees 2 lakh 6,300 you are paying to the lessor. By leasing this equipment, the lessor is getting a return. So what is the return? So return on investment is equal to 12 lakh 6,300 minus 10 lakh. Comes to be 2 lakh 6,300. This is a very simple sum. So this is how the lease rent is providing return to the lessor. Apart from this, there is another important concept in lease which is borrow and buy option. Person whenever makes a decision is having two options with him. One is he can lease the asset and use the asset by paying the lease rent, or he can borrow the money and buy the asset, use that asset. So why borrow? There is a scenario, right? He can have a money with him and he can use that money to buy the asset. Why it is always borrow and buy? Because to find which is the better position in this concept lease, we are always going to assume that the person who's the lessee is not having the money with him. Always he is going for borrow. So that is why we are always going to compare lease and borrow and buy options. As I said, under borrow and buy option, there is an assumption that the lessee is not having money to buy the asset. So he will be going for borrow first and then buy the asset. When it comes to sum, most of the sum depends on these two options. One is lease, under which you have to find the rent, or the rent will be given, you have to find the return. And there is another option which is borrow and buy. So they will be given lots of parameters here. So you have to find the principal and interest. You also have to compare these with the rent to know which is the better option. So in some cases, there will be a scenario where your rent and your principal and interest will be the same. So that case is nothing but your break even lease rental. If your rent is rupees 12 lakh 6,300 under lease option. So under the borrow and buy option, your principal is 10 lakh and the interest comes to be 2 lakh 6,300. Then if you obviously see, both are same. So the lessee either can go for lease or he can go for borrow and buy. Both will land him in the same position. So this is how we are going to conclude that lessee can go either for lease or borrow and buy. So result will be the same. So this is the very basic idea of the lease, rental and borrow and buy. So I think you just get some ideas of what are we going to do when it comes to the sum part. So it's so simple. There will be two options. You are going to compare the two options and just suggest to the lessee which is a better option for him. Not even for lessee, sometimes lessor also will be in a position to decide whether he should lease the asset or not, whether it is a beneficial for him. So in that case also you can do this analysis and just give your results. Let us move on to the next question, which is little bit complicated so that we can build upon these concepts. So the second question is, a leasing limited leases X Builders Limited and earth moving equipment for rupees 50 lakh for 5 years. Salvage value is nil. After 5 years, X will have to buy the equipment by paying rupees 1000. The Income Tax Act allows straight line depreciation at 20% on cost and tax rate is 40%. So this is the question. So they are asking the solution for point A, B, C and D. So first They are asking if lessor is entitled to claim depreciation, then what type of lease arrangement is this? So in this point, lessor is going to get the depreciation claim. So what is the type of lease? Second point is what will be the tax saving per year to lessor. Please be careful. You have to calculate it in the point of view of lessor, not in the point of view of lessee. So third point is if 12% is required rate of return. So you have to calculate the total value including the rate of return. So how much lease rent the lessor can charge. Fourth point is what will be net cash outflow on account of lease rental to the lessee. So what is the total cash outflow from the hand of lessee? So these are the 4 points we are going to solve. Given lessor. Who's the lessor? Lessor is the A Leasing Limited. Who is the lessee? Lessee is X Builders Limited. What is the value of the asset? The value of the asset is rupees 50 lakh. So the period of the lease is for 5 years. Is there any salvage value? No, there is no salvage value. So at the end of the lease, this person can pay rupees 1000 extra and own the asset. The lessee can own the asset. So in the point of income tax perspective, there are few points mentioned. The depreciation rate is 20% and it is a straight line method. It is an SLM. And the very important point, it is on cost. Okay, so 20% on cost. So then there is a tax rate. So there is a tax rate at 40%. Okay, let us move to the first point. So what we have to find here, if lessor is entitled to claim depreciation, then what type of lease arrangement is this? So this is what we are going to find. So guys, let us just recall the theory part which we have learned in the part 1 video, which says the lease rent covers most of the cost of the asset. So that means it is going to be a finance lease. So if that was the case, then if you see here, the lease rent is going to be cost plus 12% return on cost. Yes, so the lease rent covers the value of the asset. So first point is satisfied. Second point, let us go on to the second point. So on paying rupees 1000, the lessee can retain the equipment with him. If you recall again, we have seen this point. So at the end of the lease period, the lessee is having an option to retain the asset with himself by paying minimum value. That means at the end of the lease period, already the lessor would have covered entire cost plus the return on the asset. So what happens is at the end of the lease period, by paying very minimum sum or negligible amount, the lessor can have the asset with him. So the third point is lessor claim the depreciation. So this is another crucial point. If you see, there is one very important point. So the first 2 points directly implement it is a finance lease. Yes. So the third point, which is lessor claims the depreciation, is nothing but tax oriented lease. Because if you remember, there is this one point called whenever there is a lease and it involves transfer of risk and reward, then it is a finance lease. And there is no transfer of risk and reward, then it is an operating lease. So if you see, the lessor is going to claim the depreciation, that is the reward is with the lessor. So don't think this one point didn't satisfy, so this is not a finance lease. No, this is a finance lease, but in particular it is called as tax oriented finance lease. What is tax oriented lease? So in finance lease, we have pointed out that risk and reward of ownership are substantially transferred to lessee in economic sense. That means in economic sense. Thus, in a finance lease, the lessor is considered as owner of asset for claiming tax benefit of depreciation. Then the finance lease is considered as tax oriented lease. That is, we used to say the risk and reward is being transferred to lessee in an economic sense, but the actual owner of the asset is going to be the lessor. So in that sense, if you see in the point of view the question is asked, then yes, it is a finance lease, but it is a tax saving purpose, so it is a tax oriented finance lease. Okay, let us move to the next point. What we have to find in point B, what will be the tax saving per year to lessor? So the tax saving part will be the depreciation part. So let us see the formula. Tax saving per year is equal to rate of depreciation into tax rate. So this is the tax saving per year. So what is the rate of depreciation a year? It's 20% into 40% comes to be 8%. So out of the total value, 8% is the tax saving per year. So let us see. So for 50 lakh is the value of the equipment into 8% comes to be 4 lakh. So 4 lakh is the tax saving per year to lessor. It's very simple. You need not to memorize this formula. Tax saving per year is equal to rate of depreciation tax rate, because the very basic understanding here is, if you see, the depreciation is 20%. So 50 lakh into 20% comes to be 10 lakh. Tax savings comes to be 10 lakh into 40%, which is your tax rate. So 10 lakh into 40% is nothing but your 4 lakh. So you can memorize the formula, or else you can know how this flow works. So it will be helpful when there is a conceptual question asked in your examinations. So tax saving on depreciation in finance is commonly known as depreciation tax shield. So let us move on to the third subdivision. Third subdivision says, if 12% is required rate of return, how much lessor should charge the rent? Very important subdivision. We don't know the rent, so I'm just taking L to be my lease rent. So if L is the lease rent, let us find what is the cash flow after tax from lease. So cash flow after tax. Very simple, we knew that. What is the formula? First of all, the lease rent. This is the cash inflow. Yes, XXX minus depreciation. I'm just deducting the depreciation. What I will get? Profit before tax. So now I'm just going to deduct my tax. So what I will get? I will get the profit after tax, right? Yes, profit after tax. So very important point, we must add back the depreciation, because here we are just considering the cash flow. Is depreciation as a real cash flow? No, it is a non-cash flow item. So to know the real picture, we have to add back the depreciation. So we will get the cash flow after tax. So this is the formula involved here. So let me write in a linear format so that we can substitute the values and find the answer. So cash flow after tax is equal to L minus depreciation into 1 minus tax rate. 1 is nothing but your 100%. Tax rate is nothing but your tax rate percentage. So you can't directly put 40% because it is a cash outflow. We need cash inflow. So we need to minus the tax payment, right? Yes. Plus depreciation, because it is a non-cash flow. Let us substitute the values here. L minus 10 lakh. Depreciation we have already found in the previous step. 50 lakh into 20%. Yes. So into 100% minus 40%. That is, you can either put as 1 minus 0.40. Convert the value and just put it. Or if you're bit confused, just put directly 100% minus 40%. So add back the depreciation. L minus 10 lakh into 0.60. That is, I'm just converted the percentage into the number. So what comes plus 10 lakh? So finally, if you see, I will arrive with an equation. The equation is nothing but 0.60 into lease rent plus 4 lakh. This is the first equation. Note, the amount in equation 1 will be the cash flow after tax for each year. Yes, but we have to find the same for 5 years, because the lease period is for 5 years. We should cover this 50 lakh. Not alone this 50 lakh, we should also include our 12% required rate of return. Present value of cash flow at 12% discount rate for 5 years. What is it? It is nothing but present value of cash flow. So now only I just find it out. What is the cash flow after tax? What is it? We can take it from the equation 1. It is 0.6 lakh plus 4 lakh. But we have to discount it with the 12%. So I can directly use the annuity factor, because it's going to be the same. So annuity factor 12% for 5 years. We will get the value. So it should be equal to 50 lakh. So the present value of cash flow at 12% discount rate for 5 years is equal to 50 lakhs. That is the value today. So guys, hope you remember what is the formula for annuity factor. It is 1 minus 1 divided by 1 plus r the whole power n divided by r. Yeah. So by substituting the values, what is your R? 12%. What is your N? 5 years. So by solving the same, you will get the value. So where the annuity factor is 3.608. Substitute all these values. So 0.6 into L, lease rent plus 4 lakh into 3.608. This is the annuity factor because I have to compute the 12% required rate of return for 5 years. We know the today's value, the present value of the equipment, it is 50 lakh. So we are equating the future value to the present value by multiplying the annuity factor. So if we do so, we can find our lease rent by solving this. So by solving, the lease rent comes to be 16 lakh 43,016. Here, if you see, this is the lease rent, but you have to keep in mind one point. Tax savings on depreciation enables the lessor to keep the lease limited to 16 lakh 43,016 rupees, because you know that since he is claiming the depreciation, he's like there is a tax saving. So we just reduce that amount by how? When we are calculating the cash flow after tax, we just deducted the 40 percentage, if you remember. Yes, for the depreciation element. So since that amount is like reduced, your lease rent is also reduced. What if the lessor is not having any such benefits? Then he should compute this 12% required rate of return on the amount without considering the tax savings. So let us see how it works. So it is nothing but 50 lakh divided by 3.608 into 0.6. What is the 0.6? It is nothing but 1 minus 40 percentage. So the value comes to be 23,09,682. So what happens? Just see, if there is a tax saving, the lease rent is reduced drastically, or else if there is no tax savings, the lease rent will also be higher to meet the 12 percentage requirement of return. Yes. So this is very important point, because there will be certain sums which is asking you compute the lease rent considering there is a tax saving. So also compute your lease rent considering there is no tax savings. So when there is a tax saving, you have to minus that tax saving from your depreciation, and then you have to compute your lease rent. Let us move on to the next subdivision. Net cash outflow of account of lease rental to lessee. Lessee will pay lease rent of rupees 16,43,016 lease rent. That is, I just took the lease rent amount 16,43,016. Once it is done, after watching this video, please consider to find the net cash outflow using the another lease rent considering there is no tax saving. That is 23,09,682. Lessee will pay a lease rent of rupees 16,43,016. So this is a tax deductible expenditure, right? Yes, the lessee is paying a rent. There is a tax deduction on this. So what is the net cash outflow? So the net cash outflow is your lease rent into 1 minus the tax rate. So if you want to reverse the same, you have to divide it. Okay, simple. That is why in the previous step, when I want to find the lease rent without the tax benefit, I just divided the 1 minus 40 percentage. If you want to consider the tax savings, then just multiply it. Simple. Yes. 16,43,016 into 1 minus 40 percentage is 9,85,810. So guys, these are the two sums in this video we have discussed today. These two sums are very simple. The second sum is a little bit tricky, yet it is very simple. Just note this sum. So hope you like this video. Thank you.